You the way you need life to treat you. Been a fun morning, been a busy morning. News was absolutely crazy. And we knew that it was coming though, right? Because we went to forexfactory.com the way we do every morning. This is my absolute favorite routine because it keeps me from getting run over. No sound? Guys, give me a Y if you can hear me, please. I want to make sure it's not just cheetah. Do you guys have me? Anybody? Everybody no sound? Okay. Alright, YouTubers, sorry. This seems to be first thing every morning, and I don't know why. So I'm going to come back through and see what we can do. Excuse me. Here we go, here we go. Alright guys, my apology. Can you hear me now? It's like that old cell phone commercial. Can you hear me now? Can you hear me now? Awesome, good stuff. Man, I don't know why it does this to me. It loves to mess with me. That's okay though. So guys, every morning I'm checking news. Every morning I'm going to forexfactory.com/calendar. Good morning, Izzy. Good to see you. Erla, nice to see you. And I'm just making sure that there's not something nutty going on, guys. At 8:30 a.m., the market moved so fast. It moved so fast from that news that my Ninja Trader couldn't keep up. I took a long trade, couldn't touch my entries, couldn't touch my stops, and I went from zero P&L to profits reached, couldn't touch a thing, and I did the same thing in a short, and it looked like it was flowing smooth, but honestly it was moving so fast Ninja Trader couldn't keep up. So I don't ever want to get caught in that emotional thing, right? I got lucky. I was on the right side of everything. I traded my rules. It worked out. But knowing when news is gonna happen is a huge advantage. Good morning, Miss Adriana. And guys, everything that we do is about advantages. Everything we do is about advantages. And man, I am the broken record in your ear. I know that I'm the broken record in your ear. I don't mind being that broken record though. Everything that I talk about is going to come from the trading guide. Every answer that you need, everything that you need to be successful, I will give you in this room. Before you walk out today, you're going to have every tool you need to be a confident trader, to become a chart reader, to have a plan that has been proven to win more than it loses. It's the old adage though, right? You can lead a horse to water, but you can't make him drink. So I'm going to try not to say it 1,000 times a day, but I am going to say it once, and I'm probably going to say it louder than I should. Guys, keep it simple, keep it focused, get great at one thing, and then start looking for more. That's the way to get to where you want to be. So we're going to focus on that one thing, and that one thing is going to be the high probability trend trade, guys. I'm going to go to the definitions here from the Glossary of Common Terms. This high probability trend trade that we're about to spend an hour looking at, and I know some of you are like, man, we see this every day, Mark, stop. Well, most of you are still making mistakes on it. That's okay. Repetition, we're going to drive it home once again. Guys, every indicator on every chart is going to agree for this trade. You're going to have the strongest triggers. You're going to have nothing in the way. I mean, nothing between you and your target, guys. This is the best of the best. This is a trade that typically wins 70 to 80% of the time. This is the trade that creates all that confidence through the memory of success, guys. And this is the trade that turns you into a chart reader. Why are we going to be a chart reader? Because we have to know what our indicators are telling us. That's how we know that our rules are met. from what the indicators are telling us. And once you're a chart reader, guys, you're going to understand where the market is likely to continue. You're going to understand where the market is likely to go, and you're going to understand where the market is likely to stop. You're going to take this understanding, this ability to read charts, and you are going to use it to follow rules for a trade that has been proven to win more than it loses. And I'm going to tell you, chart reading is about 90% of your day. 90% of the day, you're looking for advantages. 10% of the day, you're actually trading, guys. So when we talk about this high probability trend trade, we're going to talk about 3 rules. These 3 rules are designed to create 3 advantages. And here's the little heads up for you guys. Momentum and a clear path. These are the two that you can't live without. Because when you understand momentum and a clear path, you're going to find 1,000 ways to make money. And it's really a pretty cool thing. Once you understand the idea of strong triggers creating momentum, and you understand when there's nothing in your way, no termination conditions, that clear path, the entry area is going to change. It's going to change as you change. And you're going to find a plan that suits your style, that fits your needs. But you've got to understand these concepts. So we're gonna go through them today, and we're gonna do these these 3 rules, guys, on only 2 charts. That's it. We're gonna use a large chart. Whoops, wrong one. And a small chart. So 5 things to think about, right? 3 rules, 2 charts. That's it. Keep it simple. Don't cloud your brain, guys. Your large chart is going to define momentum. Your large chart is going to define the areas. Your first 2 rules are met on the large chart. And once they're met, you're going to go to a smaller, faster chart. This is your entry chart. This is a refinement chart. It gives an X-ray. Inside of every one big bar on the large chart, there's about 20 to 30 bars on a small chart. You guys are going to take these advantages, and your entry, rule number 3, is going to pinpoint exactly where the market is most likely to continue. And this is what we're going to talk about for the first hour. I say this every day. There's an easy way to get to where you want to be, and there's a difficult way, guys. The easiest way to do it is to take a lot of pictures. I posted yesterday. I wanted you guys to see it. I'm working on some new stuff with my brother using TraderView app. And in an hour watching these markets with him, I probably took about 35 pictures. In 1 hour, 35 pictures. I took pictures of entries, I took pictures of exits, I took pictures of conditions, I annotated, and I had discussion with my mentor as we developed patterns and a trading plan for this system. And guys, your journey should be the same. Your journey should be so full of pictures and annotations. You should be able to go back and study every day. So post your pictures in the classroom, guys. Don't just take them, post them. Make sure that your chart reads are what they should be. Tell me everything that you see. Tell me why you did what you did. And guys, don't just show me entries. I said it yesterday. I'm going to say it again. Entry is half. It's only half. If you want me to judge your entry, that's great. But let's see where you get in and where you get out on that smaller, faster chart, because management's the second piece of the puzzle, and we might as well get going on it. Talk about the advantages that you see. Get in a position where every time you look at a chart out loud, you say the word momentum, and it's either preceded with a I don't have or I do have. You're going to say clear path, and you're either going to say I have it or I don't, and you're going to get to this point to where you stop looking for trades, but rather you're looking for advantages so that you can follow your rules on whatever trade presents itself. The second is the spreadsheet that Nexgen gave you when you downloaded the software. It's the exact same spreadsheet that I give you every day. I give you mine, I add to it every day. There it is in the room. Did I open mine? Oh, I didn't even open mine today. Let me open mine up and show you what it is. This spreadsheet is just an Excel spreadsheet, guys, and it has 4 tabs on it. The first tab is the copy of my tracking. This is yours. This is where every time you take a trade, win, lose, or draw, you're going to post a picture of that trade in here. There's the instructions on how to paste into your spreadsheet. There's a section in the user guide telling you how to take those pictures, how to do it. If you need help, let me know. But you should fill this up, guys. Before I went live the second time, because I went live wrong the first time, I had about 280 of these lines filled up with pictures, annotated charts, study, making sure that I could recognize the patterns that were bringing me success, making sure that I could identify the problems that I was having. Every one of those pictures went to my brother, and every one of those pictures I got feedback on. 300 lessons so I could get better. So guys, go in and use this. Post all your pictures in there. Every trade. It doesn't matter if you made a mistake. You want to see those mistakes. That's how you learn to avoid them. I love losing trades for new users because the best lessons come from the ones you lose. Because when you follow the rules and win, it's easy. It really is. And it's going to feel easy. And you're going to be relaxed. And you're going to have all these advantages. So every morning ask yourself, what worked and what didn't work, right? What's the pattern that's bringing me success? What's the pattern that's taking it away from me? And then guys, one of the most annoying qualities I have, just ask my wife, is I don't forget stuff. So if you post 10 trades in my room, by that 10th trade, I'm going to understand what your challenge is. I'm going to understand if you have a problem with reading the indicators on certain concepts. I'm going to understand if you like to jump in early or get out late. And then we're going to formulate a plan. We're going to start working together to get you away from the things that are hurting you and focused on the things that are helping you. And that's what this little study does every morning, is it sets you up for the day, guys. And it will accelerate learning if you just take the time to post, to annotate, and present. So use the spreadsheet, take those pictures, and fill this thing out, guys, every day and go back and study it. We're focused on a high probability trend trade initially, guys, and it's only 3 rules. That's it, 3. In green on the second tab, the 101 tab. There's your strong triggers. That's rule number 1 being met. I've already given you almost 40 pictures of it. Your job is to go find another 25. Clear path, same thing, and then your entries. And then the red section is when the rules aren't met, because we're going to cover both of those. We're creating recognition through repetition, and you guys are going to be able to understand in an instant whether or not those advantages are present. And you're going to learn to commit to them. You're going to learn to trust them because you're going to go back and study them over and over. The third tab is where you're going to develop your trading plan. I'm going to put in your hot little hands today a plan that's designed to optimize your chances of success. It will be up to you whether or not you choose to follow it. And then when you follow the initial plan, should you decide to, and you're taking trades that win more than they lose and you're feeling good, you're going to begin to recognize patterns. And you're going to start to develop your own trading plan. So you're going to fill this out with pictures so you always know what it looks like. You're going to begin to work on your management. A whole section dedicated to termination conditions, because these will kill your good time, and this is the most broken rule. And then finally, guys, this is where I've put a little elbow grease in for you. These are the client trades. Over 300 and probably 75 now pictures of you guys using advantages, momentum, entries at areas, clear paths, and finding ways to get your little bit out of the market. There's the high probability trend trade entry sequence for shorts and longs, a very manageable mechanical management plan. This will be in the plan that I give you today. And then ideas on when you can start to adjust your management plan, holding for bigger moves. Patterns that repeat themselves, termination conditions. Guys, make your section look like the one that I've created, and I'm telling you that recognition is just gonna come through, and you're gonna be absolutely amazed. So we're gonna learn the rules. I'm gonna talk about what they look like being met. I'm going to talk about what they look like when they're not being met. We're going to talk about the advantages and what they mean to you. Guys, simulate, practice. So if you're brand new, simulate. I mean, pull the trigger, practice taking pictures, write on the chart. This is what I saw, Mark. I don't care if it's right or wrong. We'll talk about it. And I promise you, even if you are so far off base, we're going to go back to 3 advantages and turn them into lessons. Because we got to know what you don't know so that we know how to fix it. The goal is that you try to practice the right rules, that your goal is to move towards always taking rules-based trades. Guys, the rules for the high probability trend trade are patterns that repeat themselves, patterns that have been proven through study, through simulation, through live trading. They win more than they lose, which means that if all you do is take a trade that has been proven to win more than you lose. With a little bit of management, you have the potential to really never have a bad day. So simplify, keep it basic, master one thing before you look for the next, and you've got to know what it looks like. You've got to know what it looks like. So you've got to study, you've got to take pictures, you've got to present, you've got to annotate until the looks become easy. And then what happens is that market that used to feel like it was moving 1,000 miles an hour suddenly moves in slow motion. And that's that repetition creating recognition, guys. So simplicity, 3 rules, creating 3 advantages. Initially, it's the high probability trend trade. Momentum and clear path are what's going to carry you to the next stage of your plan. We're going to do it on 2 charts. We're going to let the large chart lead the way. On the most current bar on the large chart, we're going to define direction, momentum, and areas. It's a very broad stroke, guys. The first 2 rules are met. Your entry chart is your small chart, your faster chart. This is the chart that's going to allow you to pinpoint where the market is most likely to continue. This is the chart that's going to give you the ability to reduce your risk, to maximize your profit potential. And rule number 3 is nothing more than an entry rule, guys, and it happens on that chart. And we use these 2 charts because they're just a reflection of who's in charge. Your large chart is the large crowd, guys. These are the people with enough money to make the market do whatever they want it to do. And there's 2 sides to the large crowd. There's the buying side and the selling side. Good morning, Kenan. The large crowd, guys, the big chart is going to define the direction of the market. It's going to define when that momentum is present. And these guys are going to react to those areas, those key Fibonacci areas. Your most basic plan for success, if you had a 1-line plan, it should say, don't fight the large chart, guys. These are the big fish in the ocean, right? These are the apex predators. We're just going to go with the flow. But there's always a small crowd. There's the people that will fight the large crowd. These are the people that can create little shoves, little pushes, but they fail 70 to 80% of the time. You guys are going to be able to pinpoint exactly where they're going to fail. This becomes your entry for the highest probability trend trade. So we're going to talk about these 3 rules. I'm going to get going. I want to tell you guys right now, the first hour is very lecture-y. The second and third hour, we're going to look at your charts. We're going to look at the live market. We're going to talk about everything that we see and answer any questions that you have. But if you have a question when I'm going over momentum, a clear path, or an entry area, I want you to just type it in the room. Let me know. If you're curious about what you're looking at on your screen, hey, I'm looking at the S&P right now, Mark. Is that an XYZ? Take a picture. Drop it in the room. The only chart that I have running right now is crude oil because we can get all of our examples from one chart. And I'm teaching how to read indicators. So let's focus on rule number 1, guys. Momentum. Strong trigger lines on the large chart. What's it look like? Because we're committing it to memory. Well, first let's talk about direction. If the background on your large chart is green, the market's going up. Guys, the lazy river is flowing up. Flow with the lazy river. Go with it. If the background is red, the market's going down. Go with it. Look for your rules to be met. For short trades when it's red and long trades when it's green. Because the only way you're ever going to get rules met in an uptrend is if, wow, let me get my pointer here, is if your small triggers, these solid lines, and these large triggers, your dashed lines, they have to be green as well. So the colors have to match. If they don't, you don't have strong triggers. And that's really a pretty easy safeguard, guys. If your small triggers are red and your large triggers are green, you don't have odds favorable momentum. You don't have strong trigger lines. So smalls are green, large are green. The smalls are above the large. The large are wide. They're angled in the direction of the trend. Flat triggers have no momentum, guys. When they open up, that's when it gets good. And it's this space that's created between the small and large, guys. And I love this because it is a good visual. Picture scissors open. When the scissors are open from the point where the blades separate, guys, this is your advantage. This is strong triggers. And if you just think about scissors, guys, when they're open, you can cut. You can get work done. When they're open, the job is easy. When the small triggers return to the large triggers, when they close, when the scissors close, you can't cut. You can just kind of take a stab at it. So this separation is strength. This separation is strong triggers, guys. And when you have strong triggers, this is the best of the best time to buy Fibonacci support on a smaller, faster chart. Remember, 1 bar on the large chart, these tails represent the pullback. On the small chart, you're going to be able to pinpoint exactly where that tail is most likely to form. And the same is true when you have strong triggers down. You'll be able to pinpoint using Fibonacci resistance on a smaller, faster chart exactly where that tail is likely to form. And these become your entries for that high probability trend trade. And you can ride that wave of momentum right until we get to that weakened triggers, the scissors close. This is a weakening of the large triggers, guys. And when you have weak triggers, anything can happen up or down. When you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Your advantages are pretty clearly spelled out, right? The advantage of momentum, odds favorable momentum. OFM is how you're going to see it annotated on a chart. Weak triggers, anything can happen. ACH, you're going to see it annotated on a lot of charts with that ACH acronym. Anything can happen. This is your best of the best. This is when we buy Fibonacci support. This momentum can break key areas. This momentum can even cover some of the mistakes that new users make, guys. So odds favorable momentum, that should be your commitment. The first rule that you need to learn and commit to. And it doesn't happen all day long. Odds favorable eventually turns into anything can happen. Notice that there's a reversal. Anything can happen, and sure enough it did. The market turned and went up, created odds favorable. There's your tail. You guys will be able to pinpoint this. To take that momentum up until those triggers are weak again. Sure enough, another reversal. Odds favorable. Pinpoint a tail. And guys, this is it. You just have to be patient. Wait for that advantage. And then this is that idea where the colors don't match, guys. This is a transition phase. The smalls don't agree with the large. The triggers don't agree with the background. You don't have odds favorable momentum, which means that there's no trade for the brand new user. There is no trade here for you guys that are only trading high probability trend trades. And this is where a lot of people are tempted to predict what the market will do, right? I have this gut feeling that it's going to go up. I hope it doesn't go down without me. And they do that rather than waiting for rule number 1, guys. And this is where people get into positions without the advantage of momentum and very often find themselves stopped out. So if you're patient during these transition phases, remember, 90% of your day is spent reading indicators. Eventually, either the buyers or sellers are going to win and provide you that momentum, guys. So that's rule number 1. That's about my shortest lesson. Because honestly, most people get this one pretty quick. When the smalls are below the large, when everything is wide, that's odds favorable momentum. Do you guys see it? Weak triggers, look at the retracement. Weak triggers right at an area, there's a reversal. Odds favorable pushes up. Odds favorable pushes down. Can you guys give me a Y in the room if you're with me? Odds favorable momentum, let's pinpoint a tail. Let's find a trade. Let's go short with all that momentum. Guys, this is the best of the best. This is the one I get giddy. When I see that market crank into the downside with odds favorable momentum, I am chomping at the bit to go to rule number 2 and make sure that I have a clear path, guys. Because rule number 2 is going to keep me from trading into these areas where the large crowd reacts, where the large crowd makes decisions. So rule number 2 says no termination conditions, no areas likely to stop the market. This means that I'm going to have room to my profit targets. This is my brother talking funny. Termination false, room to profit targets true. Guys, I need room to make money. I need to get paid. And if I don't have room to make money, why on earth am I trading, right? When I have room, when there's no terminations, I'm going to have a clear path, guys. So we're going to use lines on the large chart. That's the easiest way to say it because it keeps you from ranking them or giving one priority over another. We're going to use lines on the large chart because this is where the large crowd makes decisions. These are where the buyers buy and the sellers sell. These are where trends may reverse or fights might happen, guys. And we're going to look for divergence highs and divergence lows. red Fibonacci resistance, blue Fibonacci support, and yellow 1-to-1s. And these are the lines on the large chart that can end your good time. And we're going to use the trigger lines, same trigger lines that create momentum, guys. They're going to let us know if these areas are likely to stop the market. That's when we have a termination condition. They're going to let us know if these areas have the potential to break. And we're also going to know if they've broken, and we should be looking for our high probability trend trades. So we're going to go through the process first with termination conditions. Excuse me. The recipe is not a hard one, guys. It's a pretty simple game here. Price reaches resistance. Why? Because if decisions are made at key areas, we have to let the price get to the key area so decisions can be made, right? Nobody ever orders a cheeseburger 3 cars back at the McDonald's drive-thru. You wait till you get to the window, and that's what price reaching the area is. Price reaches the area, and now we know that decisions might be made. Ask yourself, where are my triggers? If my triggers remain below resistance, guys, this area might stop the market. It may create an untradeable bounce. It might reverse it. Hell, it might break. What I want you to do is I want you to say, you know what? In this moment, I don't know what's going to happen. And since I don't know what's going to happen, no trades into the area. And sure enough, this one reversed it. All that momentum pushes it down. And then we reach Fibonacci support. And when we reach Fibonacci support, your brain is going to say somebody's going to make a decision. Where are my triggers? And if your triggers remain above Fibonacci support, ladies and gentlemen, no short trades into that area. And I'm going to tell you right now, rule number 2 is the most broken rule. Following rule number 2 is the easiest way to avoid unnecessary losses. So is everybody good with that? That one's pretty simple, right? Price reaches the area. Triggers remain above support, below resistance. No trades into that area. Let's see if that ever happens in the real world. Price reaches yellow 1-to-1s. Triggers remain above. Sure enough, look at that bounce. Price retraces to resistance. Triggers remain below, and the market goes down. Holy crap, we're coming right off of support with all the triggers above it. Isn't that nuts? Right into 1-to-1s. Look at the bounce. Divergence low. Triggers didn't break. Resistance. Man, I'm telling you, there might be something to this. But guys, areas break. They break all the time. If they didn't, we'd be caught in this like 1-point range, right? So when is an area broken? Price reaches the area, triggers remain above. Guys, every line is going to be a termination condition, even if it's for only a couple seconds. When both my small triggers and my large triggers get south of support, north of resistance, when my small triggers and my large triggers get to the other side of the line, now the line is broken. You'll find that support behaves as resistance. You'll find that resistance behaves as support. And I think we just had an amazing example of that in the live crude oil. Small and large broke through the area. Do you see it? Price pulled back. Support is behaving as resistance, and I'll be damned, down it goes. This is a pretty awesome pattern that happens all the time. Area breaks, support's behaving as resistance. So guys, if you're brand new, the best thing that you can do for yourself right now is say either the area is not broken, I don't have a trade, or the area is broken, let me look for my rules to be met. Doesn't that look exactly like what just happened in crude oil? Patterns repeat themselves every day, guys. All we're doing is we're learning these patterns. So can you guys give me a Y in the room if you're with me? It's either broken or it's not. Let that be the way to look at it for 20 days. Give me 20 days. And you're going to become a chart reader, and that's going to open you up for what we call the 50-50 trade. But Mark, I want to take the 50-50 trade today. Well, you can't because you're still struggling with termination conditions, right? You're still not 100% on momentum. So the 50-50 trade has nothing to do, if I say 50-50 in this room, I'm not talking about your chances of winning. I'm not talking about a problem with momentum. I'm not talking about an area that can't be used for entry. The only thing that I'm referring to is the location of the triggers, because the triggers are what let you know whether or not an area is broken. So when my small triggers absolutely smashed through support. 50% of my triggers have made it through. But my large triggers, the slower moving average lags behind. 50% of my triggers have not. This is what we call a 50-50 trade. A 50-50 trade, guys, relies on odds favorable momentum. It relies on the biggest, baddest split between those triggers that you could ever have, because momentum can break areas. 50-50s don't happen with weak triggers, guys. That's hope. So when the smalls break through but the large don't, and I have odds favorable momentum, this support has the potential to break. But because it's only potential, because the large triggers haven't broken through, this is not a high probability scenario. This is going to be your first medium probability scenario without rule number 2 being met. And I'm going to give you a plan to take it. But guys, give me 20 minutes, 20 days. Let it be broken or not broken at all. Let that be your only option. And then you'll start recognizing this 50-50 look, and you'll start understanding when you can take trades with the potential to break. And guys, they're not home run trades. Good morning, Miss Cindy. And then finally, I'm going to give you one more definition. Strong top or bottom. Strong top or bottom. You're going to hear it all the time. You're going to see it as a way to make the high probability trend trade even higher probability. You're going to see it as a way to make those 50-50 trades more likely to win. When a termination, when price reaches an area and the triggers do not break at all, and that termination condition reverses the market, typically 4 or 5 bars later, we're going to call this a strong top. And a strong top means that the buyers were in control, the buyers were pushing, the buyers had every advantage. And when they reached this key area, either they jump ship, took profits because decisions are made at key areas, or there were so many sellers waiting right there at that key area that they were able to reverse the market and push things the other way, guys. When decisions are made at key areas so impactful that the triggers can't break, when decisions are made at areas so impactful that they reverse the market, we're going to call it a strong top or a strong bottom, guys. And this really is the precursor for the best of the best. So that's lines on a large chart. Let's go look one more time. I love looking back at the live market. I think that it creates a pretty cool visual. And guys, this is a great way to study. And watch this. I'll just pull back. If you're prone to seizures, don't look at my chart for a second. I'm just going to go back like a couple days. Here's a good example. Support, all the triggers are above. Resistance, all the triggers are below. Resistance, all the triggers are below. Support, all the triggers are above. Divergence low, the triggers don't break, it sets it off. Guys, you're going to see termination conditions everywhere. And areas will break with the potential to break. Areas will break with odds favorable momentum. But if you scroll back and you look at termination conditions and you say to yourself, lines on a large chart can jack up my good time, you're less likely to trade into them. So go study them. Is everybody good with termination conditions? Lines on the large chart? Because there's one more. There's one more termination condition that's going to happen on a small chart, guys. That faster chart, that entry chart. That chart that gives me 30 bars or so for every 1 bar on the large chart. I'm going to be able to recognize some change here that I can't see on the large chart. 3 divergences, 3 losses of momentum, guys. If price comes down and up and there's a loss of momentum, I see a blue line from a low. If it goes up and down and there's a loss of momentum, I see a magenta line from a high, guys. If I get 3 of these cyan, light blue lines from a low, or 3 magenta lines from a high, it may terminate the trend. You'll notice that I never say absolutes, guys. Lines on the large chart are not guaranteed to stop the market, but they may reverse the market, which means that I've lost my advantage. 3 divergences on the small chart may terminate the trend. It's not guaranteed, but my advantage is gone, and I trade with advantages. So if I see this at a low or this at a high, no more short trades, no more long trades. And it becomes more powerful with those weak anything can happen triggers, and more powerful still if you see it create a head and shoulders. If that final pivot is higher than the previous or lower than the previous from a high, And guys, it's this look when you're looking at your large chart and it says odds favorable momentum. Let me back up one slide. When the large chart says odds favorable momentum, when the large chart says absolutely nothing in the way, when I go to my small chart to look for an entry and I see 3 divergences, I put my hands in the air and I say, dagnabbit, rule number 2 is not met. I simply don't have a trade. And this is the only termination condition on a small chart. So that's rule number 2, guys. 90% of your day is spent reading your indicators. 10% of your day is spent trading. And you will have days where rule number 2 is going to keep you on the sidelines, sometimes for hours. You're going to have days where trigger lines not matching up are going to keep you on the sidelines. Start practicing day 1 to do absolutely nothing, because the difference between successful traders and unsuccessful traders, guys, in my experience, this is not a gospel truth, the world according to Mark, but the difference between the people that make money every day and the people that give it away is the ability to do nothing when there's nothing to do. The ability to do absolutely nothing when the advantages aren't present. And if you take a deep look inside of your trading right now and you ask yourself, when do I tend to lose the most? Is there anyone in this room other than me that doesn't take the most losses when they stray outside of their plan? Everyone in this room, when you follow your plan, it's amazing how much you win. And the second you form an opinion, it's amazing how quickly that money dissipates. That's every trader I've ever met. So start learning how to do absolutely nothing when there's nothing to do, and you'll be amazed at how often your trades work out. So, large chart gave me strong triggers. Ron, thank you for being brave enough to admit it. Large chart gives me the advantage of momentum, the advantage of a market that's likely to continue in the direction of the trend. Large chart identifies termination conditions by using lines on the large chart to let me know when I no longer have a clear path. Once these rules are true, once both of these advantages are in place, there's a million ways to make money in the market, guys. But the first way you're going to learn is through the entry. Using the smaller, faster chart. Embracing the small crowd, letting them fight, guys. You're going to use a limit order. You're going to be so precise that you're going to wait for the market to come to you. You're going to use a limit order at areas, fibs, mid bands, yellow 1-to-1s, and those areas need to be inside of triggers, inside of favorable large triggers, guys. So the large chart defines direction. The large chart gives you momentum. The large chart lets you know whether or not you have a clear path. When your rules are met, you're going to take a dissection, an X-ray. The bottom of this bar on the large chart, when the rules are met, is the beginning of a pullback on the small chart. The tail on the large chart should be an area inside of triggers on the small chart, guys. We're not trading the tails. You guys are going to get in up here and ride that wave of momentum down. And we're going to do this. Trigger lines again. Trigger lines, gosh, they show up everywhere. Trigger lines again, guys. Trigger lines are moving averages. And I'm not going to lie to you, I'm not a super smart kind of guy. I don't understand how the programmers create these triggers. But the one thing that I do know, absolutely, is that price tends to return to the large triggers. Whether it's the large chart or the small chart, it's a correction, moving average something or other, regression of the mean. I don't know, math people do this. But what I know is that price comes back to the large triggers on both charts. So what Nexgen has done is they've put both sets of large triggers, the large triggers from the large chart, which we call the synthetic triggers, they have little steps on them, and the large triggers from the small chart. And guys, when these overlap, the market has one place where I expect it to correct to. And you're going to hear that in the room a lot. Triggers are the correction point. Triggers are where I expect price to come back to. So when they're one on top of the other, two snakes riding piggyback, right? I have the absolute smallest correction point. When I put something for it to bounce off of, the market to bounce off of, fibs, mid bands, yellow 1-to-1s, Now I've got an area where the market is most likely to continue, and this is how you're going to identify your entries, guys. You're going to find the areas inside of the correction point. So we're having this talk this morning in the room. When everything says up, when the market is absolutely screaming, when there's nothing in the way, the momentum is there, the small crowd typically shows up and tries to ruin the party, guys, and you see it on a reversal bar. The reversal bar is not your entry for a high probability trend trade, because when you get this reversal bar, you're on the wrong side of the triggers. This is a loss of momentum, and this is the loss of momentum that we expect to push. That's the small crowd fighting. So you guys that keep jumping in on this bar, you're jumping in right before the most anticipated retracement in the history of trading plans. So the reversal bar signals the fight, not the entry. At the time of the reversal bar, I'm going to look to my triggers, large and synthetic. I'm going to be sure that they're overlapping, one on top of the other. Hell, I might even draw a box around my trigger lines and say the trigger lines represent the point where I expect price to correct. But I don't expect trigger lines to create a bounce. I don't expect trigger lines to reverse the market. I don't expect trigger lines to do anything other than identify where the market is likely to correct. The areas inside of those trigger lines. This is my bounce point. I'm throwing a tennis ball as hard as I freaking can. The trigger lines are like clouds in front of a wall. The areas inside of the trigger lines are the wall where we expect the bounce, guys. So we're going to create what's called the window of opportunity. The woo for all you Ric Flair fans. From the highest point of support to the lowest point of support inside of favorable large triggers. This blue box, this cyan shaded box, represents the point where the market is most likely to continue. This represents where I expect that bounce to happen. Nexgen users, new kids, you are going to activate a limit order. A couple ticks above that window of opportunity, a couple ticks above that highest point of support, and you're going to wait for the small crowd to get there, and when they do, you are going to be in your trade, guys. I want you to notice that this fib is on the wrong side of the triggers, on the wrong side of the correction point. This fib is not in the window of opportunity because the market will have to go beyond where we expect it to go to hit it. So guys, this becomes your entry for the highest probability trend trade. And the great thing about futures is we don't care if the market goes up or down. If the market is trending down, if the momentum is strong, if the path is clear, I'm going to turn my attention to the small chart and I'm going to wait for the reversal bar. I'm going to wait for the small crowd to fight, guys. And the reversal bar is not the entry for the high probability trend trade. At the time of the reversal bar, I'm going to identify my favorable large triggers, and then I'm going to search for areas within. Fibs, midbands, yellow 1-to-1s. It's the area inside of favorable large triggers where I expect the bounce to happen, guys. This is my brick wall. Price is the soccer ball. This is where I expect it to bounce. You see the small triggers and the large, but you're not. All right, no worries. So Christine, great question. Thank you for asking that. So the large chart has large triggers. We use them with the small to determine odds favorable momentum, right? The small chart has large triggers. So we expect price to return to the large triggers on both the large chart and the small chart. Does that make sense, everybody? Give me a why. Let's do this for the whole class because I know some of you are wondering this. I expect the price on the large chart to come back to those large triggers. I expect price to come back to the large triggers on the small chart. So what happens, guys, and Christine, what we've done is on your small chart, the smooth triggers are the large triggers from the small chart. The stepped triggers are nothing more than the large triggers from the large chart. We call them synthetic triggers. But what we've done is we've created this ability to take the correction points from both charts, and when they overlap, that's where that snake's riding piggyback thing comes in. When the large chart correction point and the small chart correction point overlap, you've got the best of the best. You've got the smallest point where we expect price to correct. Does that make sense? Thank you for asking that, because everybody's wondering it. Guys, I'm telling you, if you have a question, just ask it, because I'll turn it into a separate lesson. I'll say it differently to make sure that everybody catches on. And I created this, so let me give you guys this as well. It talks about the correction point, the moving averages, and it shows you a couple different things. Let me see if I can blow this up a little bit. Let me go to 200 on this one. When they're overlapping, the precision is amazing. When they're overlapping, it's so easy to find your entries. But let's go to the other side. When they begin to separate, when those snakes are no longer riding piggyback, ladies and gentlemen, I have a correction point here, and I also have a correction point here. I have increased the distance where price may return, so I have decreased my ability to understand whether it's going to go from here or from here. When they begin to separate, that's where the indecision comes in, because I don't know if it's going to go to the small chart or the large chart correction point. Does that make sense, guys? I'll drop this one in the room for you. And that's where the whole idea of favorable large triggers comes in. When they're overlapping, it takes the guesswork out. When they're overlapping, it's easier to pinpoint the smallest amount of areas inside of them. And you see it over and over, guys. And these lines beyond the correction point, they're outside of that window of opportunity. They're beyond where we expect the market to bounce, guys. So if you give me 20 days pinpointing where the market is most likely to continue, if you give me 20 days of learning momentum and a clear path and being able to start to recognize these areas inside, ask a million questions, post a million pictures, guys, you know where the market is likely to continue. Which means, and this is kind of cool, you know where the market shouldn't go. You're going to develop so much faith in this entry because you're going to study it, you're going to practice it, that you'll know exactly where the market shouldn't go, guys. And your initial stop when you enter a trade is going to go 4 or 5 ticks above those trigger lines, beyond the correction point. And you're going to say to yourself, you know what? If the small crowd can push all the way beyond that correction point, I don't want to be in the trade anymore. If they can push all the way below these triggers, below these areas inside of them, I don't want to be in that trade anymore. And guys, anything that wins 70 to 80% of the time, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time, which means you're going to become okay with taking losses. And I know that seems kind of weird right now, but you're going to be okay taking losses. But you're going to be so focused on advantages that you're going to make sure you're taking the right losses, not the ones that are based on opinion, not the losses that are without momentum, not the losses that don't have a clear path. These are going to piss you off. But when your rules are met and you know it's a trade that wins more than it loses, guys, you're going to be cool when your stock gets hit 2 out of every 10 times, 20 out of every 100 times. And the great thing is, with all the advantages of the high probability trend trade, more often than not, you're going to get a reversal bar in the direction of your trade. And this is going to allow you to reduce risk even further. 2 ticks above it if it's going down, 2 ticks below it if it's going up. And you're going to reduce risk so dramatically that it's not unheard of to see Nexgen users take perfect entries, high probability trend trade entries, get that reversal bar, reduce their risk, and only lose 30, 40 bucks on a trade that fails, rather than losing $200 to $300, hoping that the market is still going to go up from the wrong side of the correction point, from the wrong side of the areas inside of it, guys. And this becomes a big part, because even though you're losing 2 or 3 out of every 10, you can minimize losses dramatically with a very solid plan. But you've got to go back and study and be able to find these entries, guys. And everything begins on the large chart, strong triggers, no termination conditions. And if you circle the tail on a large chart when you see these conditions met, guys, you're going to find that if they line up with areas inside of triggers, you now have a trade. And with nothing moving, right? No fear of loss, no anxiety. Can everybody see the strong triggers while it's standing still right now? Absolutely no problem. Small's above the large. It's pretty easy, right? Can everybody see that price on that bar did not reach this magenta line? Pretty easy, right? No, there's no fear here. Circle a tail. Guys, I don't have to try to time it. My market's not moving. There's my reversal bar. There's my pullback to the areas inside. And there it goes off to win. So if you go through that spreadsheet I gave you, you're going to see pictures like that over and over without the market moving, with no fear of loss, with absolutely no anxiety. Strong triggers, clear path, pull back to areas inside. There's a winner. Strong triggers, clear path, pull back to resistance inside of favorable large triggers. Notice that if I circle the tail, it lines up with resistance inside of favorable large triggers. Guys, this happens every day. All you have to do is watch it a while. Commit it to memory. Learn these rules. I'm going to do this real quick. And I'm going to do it right here because I want you guys to see this. All this momentum from a strong bottom. This had the potential to break. And I'm going to circle the tail. And I'm doing this one because I took this trade. And I took it as a 50-50 trade. Had to be managed. But can you give me a why? Potential to break. There's your pullback. There's your areas. They're right inside of triggers. Guys, I don't make this up. This happens every day. I wasn't in front of it here. I didn't take this trade. I took this trade. Odds favorable momentum, potential to break. I got in right at the top. My stop was 4 to 5 ticks beyond the triggers. I didn't get stopped out. I had to sit through a little, but I didn't get stopped out. I took profits, and when my rules were no longer met, I exited the trade. That was just $100, but it was an easy $100. It was a rules-based $100, and I'll show you the whole lineup for it. But before I do that, I want to give you guys a couple gifts. The first one that I want to give you is how to become a chart reader. Guys, the quickest way to get to where you want to be is to recognize these looks and to be able to recognize them quickly. So this Chart Reading 101 is designed to put you in a position where you never miss out on these advantages. And this Chart Reading 101 goes through the idea that you need to fill up this section of the rules being met and the rules not being met. So you're going to take 25 pictures each, guys, of strong triggers and weak triggers so that you never get confused between the two. You're going to take 25 pictures each of a clear path and a termination condition so that you can commit the looks to memory. And then you're going to take 25 pictures of a 50-50 look. So you never get caught up thinking that the area is broken when it only has the potential. And then you're going to take pictures of those high probability trend trade entries, guys, so that you know exactly what it looks like when it's time to enter. But you're not just going to take pictures. You're going to annotate those charts with the whys. Why are they strong triggers? Well, because the smalls are above the large, or because the scissors are open, because the colors match, because that space between the two lets me know. And you're even going to talk about what it means to you, right? So let's go here. Let's see if I annotated this one correctly. So smalls are above the large, strong triggers because they're wide open. The smalls are above the large, rule 1 met momentum. In this same picture, weak triggers, smalls are inside of the large. Anything can happen, rule number 1 not met. Guys, if you go back and you look at this picture and 50 like it, you're never going to get confused between the two. You're going to have such a great idea of exactly what it means to have your rules met that it's going to be difficult to break them unless you just make the choice to break them. So go through this, guys. I've never had anyone do it and not feel like they came out a better chart reader, but I've had a lot of people not do it and still make mistakes, make the same mistakes over and over. So I'm also going to give you the high probability trend trade checklist, guys. I put this one together, and this is actually 2 separate checklists. The first page is just a checklist to get you into a high probability trend trade. So you can print out this first page, print out 10 of them, grab a big bright crayon and make sure you can mark yes to each of these. Are you coming from a strong top or bottom? If you are, it increases the likelihood of success. But you can still take it. You just got to watch it a little closer. Odds favorable, no terminations, areas inside of favorable large triggers. These are the exact same rules that you should be writing on your chart every time you take a trade, committing the looks, associating with the words, and believing in the advantages. Guys, I've never had anybody follow this checklist to the letter and do worse than 70% winners. And as you're taking these pictures and you're learning it, well, there's your strong bottom, a no triggers through termination that reverses the market. There's your odds favorable momentum, and there's the opposite, those darn anything can happen triggers. Termination, potential to break, broken. Your goal is to get to where you don't confuse these concepts. There's your short entry, there's your long entry. So I dropped this in the room as well, guys. Use this as a study guide as you get going. Use it as something to commit to as you are following this plan that I'm dropping in the room right now. This is the beginning. This is your foundation, guys. This is the KISS plan. This is the Keep It Simple Sunshine plan, guys. And it's nothing more than a stepping stone in your learning journey. It's a little boring, right? It's kind of vanilla. It forces your hand to be patient. But guys, this optimizes your chances of success with the high probability trend trade. This is the plan that puts you in a position to win up to 70 to 80% of your trades as a brand new user. This is the plan that is designed to make it so you learn to read your charts so that you can speak to yourself in terms of advantages. And guys, this is the plan that should get you started. And I've had people use this plan, kid you not, use this plan in their first 30 days with Nexgen and get funded in those prop firms. Get funded by complete strangers because they're showing such a level of consistency that they're making more than they're losing. 30 days with Nexgen. I'm seeing people be successful with this. And then through simulation, study, class feedback, continuous practice, guys, you're going to make up your own plan. You're going to start to see patterns. You're going to take different entries. You're going to manage differently. But in the beginning, this gives you something concrete to focus on, to learn to become a chart reader, to learn how to manage. The simple plan for consistency, I said it earlier, I'm going to repeat it. Never fight the large chart, guys. Don't fight the large chart direction. Don't fight the large chart momentum. Don't trade into the large chart areas. We all love the idea of anticipating a reversal, guys. We saw it yesterday. There was about 50 lines where that market could have reversed and didn't. You don't have to be first. Let the large crowd tell you when it's good, guys. This seems like a good picture time. There's the large crowd. This is Norbert. We've named him. This is the apex predator, the guy with the deepest pockets, the person, the lady who creates the trends, who establishes momentum. All we have to be as remoras. This person makes billions of dollars of transactions a day. You have to catch 300 to 400 of it a day to be a successful trader, guys. So don't fight the large chart. Define your entry. Learn how to get in where the market is most likely to continue. And this sets you up for management. And guys, this management plan that I'm about to talk about is right in the spreadsheet under the client trades. But the same way your entries are mechanical, the same way your entries are rules-based, the same way your entries are void of emotion and fear because you're going to study them and trust them. Management needs to be the same way initially because you're learning to read your charts. But once you can read your charts, guys, guess what? You're going to adjust your management plan. Your stops will be different. Your targets will be different. But until you can do that, keep it mechanical, guys. And your initial management, your first stop placement, we saw it in the PowerPoint, is putting your stop where the market shouldn't go, identifying the window of opportunity and getting that stop 4 or 5 ticks beyond and developing this okayness with getting stopped out 20 to 30% of the time because it's just a cost of doing business. But more often than not, you're going to get that reversal bar in the direction of the trade. And when you do, you'll be able to reduce your risk 2 ticks above that reversal bar or 2 ticks below for a long. And you're going to put your hands in the air or under your butt or roll back from your desk, whatever you have to do, you're going to do absolutely nothing until you either get stopped out or your first target gets hit. And KISS plan users, your first target is $100 in the distance. $100. With all that momentum, with that clear path, with that perfect entry, it's freaking hard not to hit $100 more often than not. And this $100 creates confidence. And this $100 dries up your sweaty palms and it makes the butterflies in your stomach fly south. And this $100 makes you feel good about everything going on. And you're going to move your stop to break even. So now you're going to take all the risk off and you've been paid. And guys, this isn't the smartest stop ever. I'm going to tell you right now, it's going to get hit a lot. But the reality is it makes it easier to hold for the second target. And your second target, KISS plan, is only $200 in the distance, guys, which means that if you take the perfect entry, I entered where the market is likely to continue. If I get stopped out, I'm cool with it. But if I get a reversal bar, then I'll adjust my stop. If then, keep it mechanical. If I don't get stopped out after the reversal bar and it hits my first target, then I will go to break even. And if I don't get stopped out break even and it hits my second target, I will exit my trade and not worry about what happens next, $300 richer. And guys, this is your first 20 days with me. If you can commit to this for 20 days, you're going to be a chart reader. You're going to have faith in the methodology. You're going to believe that it works. And you're going to find yourself in a position where you start getting a little stingy with your time, where you don't want to forfeit momentum, where you're not willing to trade into areas because of the success that you're finding. And that's going to carry you to the 50-50 trade. Guys, the 50-50 trade is that trade where it only has the potential to break, but it's not broken yet. And this is the most lost trade with new users because we get so excited about being in a trade. We get so hopeful that it's going to win that we ignore red flags. So this is designed to optimize your chances of success with the 50-50. This isn't the end of the road for the 50-50, guys. This is the best way, highest probability to take it. From a strong top or bottom, insist on it, because this is a game changer in almost every move in the market. Odds favorable momentum on both charts. Why am I insisting on odds favorable on both charts? Because I don't have a clear path. Why on earth would I give up momentum? And it says no divergence on the 5-1. No divergence on the 5-1. Divergence is the number one killer of 50-50 trades. And if you mark yes to all of these, you're in at the area. And it reminds you no divergence. And when you get to management, it stresses if divergence prints. Exit the trade. Morgan, when is the mid-band a termination condition? This is one of those, guys, if you're ever debating, you don't know your rules. If you're ever debating on whether or not an area is a termination condition, then you're not sure on your rules, and that's okay. But the large chart is a termination if the large triggers are a full bar away. That's it. That's the only time it's a termination condition. There's no such thing as a 50-50 on a mid-band because once the triggers aren't a full bar away, once the triggers are not a full bar away, it's no longer a termination. So let's see what you have. Great termination condition. You have a 50-50 on the fib, right? Smalls are through, large are not. Are the large triggers a full bar away? See your reversal bar marker? Your large triggers would have to be below. Guys, this reversal bar marker is the point where this bar becomes a reversal bar, which means that it's going to smash right into your large triggers before it ever makes a reversal bar, Morgan, which means that the mid-band is not behaving as a termination condition. The gap theory is not in effect here. And let me find a picture of the gap theory just so that we can see the other side of the coin. Because I think that seeing it is awesome, but seeing when it's true pays dividends as well. So, oops, Jen made me this picture. Thank you, Jen. When price reaches the mid-band here, and those large triggers are more than a full bar away, when there's room for the whole thing to print before it hits it, there's your gap theory, Morgan. This is when the mid-band is behaving as a termination condition. That distance to the large triggers, because you guys remember price likes to go back to the large triggers. That's when you've got that gap theory. That's when we're not taking that trade. Here, large triggers are close enough. The mid-band is absolutely no worries, but it's very much a 50-50 on the fib. Great stuff. And then just, I don't know if you guys know this, right here in the spreadsheet I gave you, there's about 25 pictures of gap theory in here. Take an afternoon, go through it. Change your world. No worries, man. Great question. Guys, keep the questions coming, because the only way we get better is if we question everything. The only way we get better is if we see things repeatedly, if we go back and we talk about things over and over. And I love each and every one of your questions. How do you add back the reversal bar? Are you missing it, D? Cool. So right click on your chart and go to indicators. And once you go to indicators, go to T3 Pro Trader Synth New, and it'll bring up the options. And let me take a picture of this for you. Andy, you met your goals again? Are you just going to do this every day? Is that the plan? Outstanding, man. There's no hope. You're going to have it show reversals on your 13-2 chart. And that's going to get you squared away, D. Sometimes it goes away because something is corrupt. You can also, if that is checked but it's not there, right click and reload all historical data. And if that doesn't fix it, you can always just reload the template. So go down to templates and load and put that 13.2 template back on it and let it run through its calculations again. And that includes having that reversal bar. So there's 3 options for you. You should be able to get there from that. I love that. And yeah, he does. No, my brother is very generous. So check it out. Morgan, 50-50, no divergence. Divergence prints, kills it. Guys, there's that KISS plan. Avoiding unnecessary losses. Write that on a piece of paper. Avoiding unnecessary losses. And Morgan, that is not a strong bottom. Pretty cool, right? So you're starting to say it out loud. I'm telling you guys, scare your animals. Say this stuff out loud. Say it loud in the room. Make the parakeets chirp, right? I don't have momentum. I don't want to take a trade. My path isn't clear. I don't want to take a trade. Or the flip side, get excited. I have momentum and a clear path. Son of a gun, let's find an entry area. And guys, that's it right there. Just commit to the rules. One more thing, and then we're going to take a break. And I made this. I'm going to drop this in the room as well. Guys, this is exit conditions is what this is called. But it starts beyond exit conditions. It talks about there's 2 things that you have to know. And I say this before you go live, because you're not going to know this as a brand new user. You're not expected to know this as a brand new user. Stop putting pressure on yourself to be perfect on day 1 or day 2 or day 3, guys. But when it's time to go live, when it's time to go to that prop firm, when it's time to risk your own money, you have to know why you will enter a trade, rules that have been proven to win more than they lose. That should be the only reason to ever get into the market. You should never worry about wins or losses. You should focus on the execution of your rules. But then you have to know why you're going to exit your trade. And guys, you got to commit to the rules met. But here's the deal, and this is what people don't seem to understand, is that management's a big part of what we do. Guys, management's a huge part of what we do. But management is dependent on the trade that you're taking. And I hope this makes sense. So if I'm in a high probability trend trade, this is what it's going to take to get me out. So every time I take a high probability trend trade, my brain is thinking about, if I'm on the KISS plan rules, I'm following those. I'm looking for second higher lower divergences, divergence from a 1-to-1, large chart areas. D, that's the same thing that we talked about, or 3 divergences in the same range. But as soon as I add a 50-50 trade, I've got a whole new set of management criteria that I have to think about. And then when I add a momentum trade, a Nexgen rules-based momentum trade, I have a whole different set of criteria to think about. And then if I add an HVA trade, I have a whole different set of criteria to think about. So guys, simplicity keeps you focused. Master one thing before you add the next, because you're going to give yourself a lot to think about. And it's funny because there's a very successful trader over in the traders chat, and she started day one, and she was trying to catch about 4 different trades, and she always mixed the rules because she didn't know one well. So she would take a high probability trend trade she was thinking, but it was actually a 50-50, but it wasn't even a 50-50. She was using HVA entry areas, and she had no idea how to manage it, and it got very confusing for her. And then once she settled down and went back to the best of the best, she caught her focus, found her patterns, and she is absolutely crushing it. So, guys, that's my first hour. Every hour we talk about it. When I come back, we're going to start looking at your pictures. I'll leave you guys with crude oil. I don't have any rules met in the moment. When I come back, we'll start looking at pictures, guys. Go stretch your legs. I am back. So I'm going to scroll up to the very top of the room. And we're going to talk about everything that's been posted. But guys, what do you think? Who went short at a mid-band and wonders why they just got run over? If you did, post it in the room. Let's talk about it. I will be back to the bottom in a second. I'm scrolling to the top. And guys, we're going to talk about everything that's been posted. Busy morning. All right, Paul W., we're going to start with you, my friend. Weak bottom. I like it. You said you did not enter the trade setup. Business here had to be postponed for business elsewhere, so I did not want to possibly lose and not have time to look for another trade. I'm not sure where you were talking about there. But we have odds favorable. We have a clear path. We have odds favorable, 50-50, no divergence, perfect entry just above the correction point, stop where the market shouldn't go, and really easy money. Paul, this is beautiful. Everything about this makes sense. Everything about this makes sense 100%. Momentum, potential to break, no divergence, getting in at the area, and it is not inside of the triggers, but it is above that correction point. So your stop placement is beautiful, and taking profits. I mean, I couldn't do that any better. Andy. So Andy, I replied to this one. And you said the second one is the result. Why do you suppose this one failed? And I think that this is one of those instances, guys, where you start making up rules and half-truths. So, Andy, I do want to go through this for everybody. Because the one thing that you said is this is a parabolic trend. And that is... What does that mean? It means that it's a strong trending market. How do I know it's a strong trending market? I want to cover this definition for everybody. We call a market strong trending when it is 30 large chart bars without a reversal, 3 or more broken areas. Guys, this is a strong trending market. This is when either the buyers or sellers, depending on which way it's going, have said, we're on a freight train and we're just going to keep going. And you notice it because you get the small triggers riding the large triggers and they look dashed. So you get the small dashed riding piggyback on the large. So that's cool, right? This is a strong trending market. Andy, you did an awesome job recognizing it. So there are people, and I'm going to write this out because, Andy, this is a good one for your notebook. When I have a strong trending market, the rule of thumb, we won't even do that. Buy the mid-band until it stops working. That's it, guys. That's the strong trending market. Buy the mid-band until it stops working. Does that make sense? Andy, does that make sense? Which means that if you're going to try and take advantage of a strong trending market, that's your entry right there. That's the one. So what you did, and let's just kind of go through it, is you do have strong trending. You do have a clear math. Sounds good, Jonathan. But you are fighting two divergences. You are fighting weak triggers, and you're just jumping in the middle of nowhere, hoping shit works out. Pardon my French. Does that make sense? And this is that excited, this is that adrenaline, this is that, oh man, I hope I don't miss it. And I don't know what it did. I don't know if it pulled back to that area or not. But I don't have any rules. And I don't think you have any rules for this one either. Did it go up from the mid-band in that strong trending market? I'd love to see the next picture. I don't have a gold chart. Maybe you can answer that for me. Or is that the one that stopped working? And guys, no worries. You think it did go up from the mid-band? And guys, it will eventually stop. You will take a loser if you keep buying mid-bands in a strong trending market, because eventually that strong trend is going to die. But maybe this helps out a little bit. Drop this in your spreadsheet, Andy. When you're excited about that strong trending market, remember that we're buying mid-bands until it stops working. And if you just jump in arbitrarily, right, especially with no momentum, two divergences, oh my gosh, it's less likely to work. So good stuff, man. I know you hit your goals today. And what's cool is you hit your goals even though you didn't win every trade. And it just says losses are a part of trading, guys. They always have been. They always will be. All right, let's look at this one. Bad bottom, 50-50. Am I missing an entry somewhere? 50-50. Bad bottom. You got out before you stopped out for a loser. Was it this one? I don't know where you got in, Andy. I have no idea what you did here. I don't know if you're trying to show me a potential short, or if you're looking for a potential long somewhere, or if this is just no trade. It says you got out, but I don't see any trades there. No entry? Okay. So you never got in. You just never took the trade? Got out suggests that you got in. You canceled your trade. Is that right? You were looking and you were like, whoa, divergence, that's not my trade. Choose not to take it. So you never really got out. Canceled the order. Okay. I just wanted to make sure. I was like, I don't see entries here. And usually I can see entries on your chart. All right, Paul. Did not enter here. It's still above fib at the time. What does that mean? What is still above fib when you say it? Looks good now. Not at the time of setup. Area was at edge of 5-1, not inside of 5-1 large triggers. Now it's, wow, wish I'd entered, but in hindsight for experience, that's a wait. So, odds favorable. 50-50, no divergence, and it's not quite at the triggers, right? So if you choose to take this trade based on the strong top 50-50 everything, you just know that your stop has to go up here. Does that make sense, Paul? I'm not sure what it is. It's definitely a 50-50. But everything else is pretty solid, and that's where, with your level of experience, since you know where stops go, you can use that fib and just make a decision on whether or not, you know where the market shouldn't go. Are you willing to risk it? I'm going to click on a few so that it's easier here. Because I have to scroll up and down and see all this. Yeah, no worries. And then you said here, this would be into termination with divergence. What termination are we talking about here? The market stopped at 35. The fib was 31. So I've got 4 ticks here. I've got 4 ticks here. I've got a clear path. I'm not sure which termination condition you were referring to there. What I see is odds favorable, a clear path. Maybe you wait for the reversal bar because of a second higher divergence, but it's an area inside of favorable large triggers. Is it possible that you outthought yourself on this one a little bit? That happens sometimes, guys. And this goes back to The more things that you put into your brain when you're looking for a trade, guys, the more likely you are to miss the good ones. So let's see this. On 5-1, upward divergence retreats. Bearish divergence returns. Entry short here could have been taken. Wait until divergence is cleared. That sounds like a lot of rules that I've never taught, right? How about, and I think that I put this in the room. And this is good. And Paul, you know I'm not worried about you. You wanted to, but somebody put a knife to your throat and said, don't. Don't trade with bullies. Never works out. So this was my read, right? And guys, I want you to the drug cartel. Damn drug cartels. Strong top, odds favorable momentum, clear path, pull back to area inside of triggers. And guys, this is an outstanding lesson that once you're a chart reader, you're going to try to create more rules. Once you're a chart reader, you're going to try to fabricate different scenarios. You're going to try to give power to every movement on the chart. So guys, right now I'm really talking to my Christines and my very cryptos and you guys that are really focusing on right now catching these trades. Because this is the absolute best of the best. And the only thing that takes me out of a trade on this is 3 divergences in the same price range. And I never got it. I never got it. It went to the area inside of triggers. My stop stays safe the whole time. Everything is perfect. But the more things that you put on your chart, the more things that you allow to enter your brain, the more rules that you create, the more scenarios that you give power to, the less likely you are to catch the easy ones that make money. Paul, thank you for posting that. Odds favorable, clear path, pull back to resistance inside of triggers, easy freaking money. Andy said that he wasn't in front of the computer for this one, but golly, that's pretty, isn't it? Isn't that everything that we hope for? And this is the cool thing that Andy did. Andy wasn't at his computer. Andy wasn't in front of it. Andy didn't take this trade. He didn't make any money on this trade. But he said, you know what, Andy? Go back. Because he refers to himself as Andy. It's a weird thing. But he goes, Andy, this is the best of the best. This is the one. Why don't we go ahead and annotate it? Why don't we go ahead and record the results? And why don't we see how successful we could have been if we didn't have to feed the dog? And let's make sure that we never miss this one next time. So Andy, outstanding, dude. What a great look. These are the kind of pictures that when I see them in the room, I steal them and I go back to my spreadsheet and I scroll down and we'll just tuck you into this open spot. And I drop Andy's link in there and I'm like, man, Andy's perfect trend trade short. Because I want you guys to go back and see that. I want you guys to study this look. I want you guys to never miss this trade that Andy was nice enough to annotate and point out for you. That's what the spreadsheet pays dividends, guys. There's like 300 pictures of these. Beauty, Andy. And then Paul, momentum, clear path, entry 5-1, early day. And you went back and did it, right? And this is, guys, this is the sign of a student. Paul realized, he goes, oh man, I kind of jacked this one up a little bit. Let me go back and annotate it. Let me go back and talk about the advantages. Let me go back and pinpoint my entry. And let me come back to this one and realize that this is the one that I'm not supposed to miss, right? And then even here, Paul, 50-50. No divergence, pulled right back to the mid-band inside of favorable large triggers, right? So while you were pining about this one, they gave you another chance to make some money. Kind of cool. Great pictures, gentlemen. That's the first part, so let's keep going. And remember, if you have questions about somebody's pictures, if you have questions about what someone else has done, guys, throw them in the room. Ask them. Once they hit the room, they are fair game, 100%. And then Let's see. Ron C. I bet you it has something to do with momentum. Oh my gosh, there it is. And I made a picture for this one. So Ron, I'm going to pull up this picture. Ron's picture has every trigger going the same way. Ron's picture has momentum. Ron's picture is 11 ticks, guys. 11 ticks. For you guys that keep jumping into trades, that's how you manage these. Get in and get the hell out. And this goes back to, and this is going to be a lesson because I see this all the time. And Andy, this kind of goes back to that one that you took on gold. Guys, if price is left at the small triggers, if it's not closing, this is the momentum phase. If you're going to jump into a trade, guys, this is your look. This is your look. The second you get to the wrong side of those small triggers and it closes, your momentum is over. It's done. It's not a momentum trade anymore. And guys, this is the trade that I see you guys taking all the time. And this is, honest to goodness, I've deemed it the JTFI trade. The jump the in trade. You feel free to create whatever word you need to for the F. But I see people taking this all the time. Man, I've got momentum. I'm just going to jump in. And then they lose their momentum. And they get stopped out right here at the trend trade. They get stopped out right here at the trend trade. Guys, you have to know what kind of trade you're in so you know how to manage it. Once you're out of the momentum phase, you find yourself in trend trade territory. Pullbacks inside of the large triggers. Every day I scream at the top of my lungs, the reversal bar is not your entry. This is where failed momentum trades go to die, guys, and trend trades. And if you enter and you think that this is going to go on forever and you decide to hold for the trend trade, if that trend trade fails, that's a huge loss. That's a lot of drawdown. So you guys that are doing the JTFI, I shared this in the room. That is the best case scenario for management. Get in, get paid, get out. Thank you, Ron C., for reminding us that when you're on the smallest possible chart and the fastest momentum indicator, that stuff's not going to last, guys. There's fluctuations all day long. I learn a lot from you guys in the room, guys, and I try to turn them into lessons for everybody, but that is the absolute greatest lesson ever. If you're just jumping into the market hoping it goes forever, you're doing yourself a disservice. All right, Jonathan, are you back yet? Not yet? And here's a little something to that effect. If you take the momentum, rules-based trade, guys, and you're in it, you've lost momentum here. It's not a $1,000 trade. That's what pulls you back to the trend trade. If the reversal bar is not your entry for a trend trade, why are you using it to jump into the market? Stuff to think about. Stuff to think about. And then, guys, I did put a whole series of me taking a 50-50 trade in there. You're welcome to go look at it. I typed my rules on the chart start to finish. I'm not going to go through all of it, but you're welcome to it. It's up there in the chat box. All right, Josh, how you been, man? Nice to see you. Let's see what we have here. Sorry, Miss Donna. I'm going to dismiss your request to speak. Just type in the room if you have a question, please. If I give up the microphone, these guys are gonna take over. So, all right, Josh, weak top, dig it. Odds favorable, love it. Perfect entry, faux show. Didn't work. Tried again, hoping it would. So you got stopped out, and then you jumped in again, and then you got stopped out again. I love the trade, Josh. It's everything that you look for. But here's the deal. This is the NASDAQ. Are you with me in here? I want to make sure you're with me in here. He may not be. He might have left. He might have said, to hell with you, Mark. I'm gone. That's okay. We're going to annotate up his charts. Do I have any NASDAQ traders in here? All right, guys. So NASDAQ is a different animal. NASDAQ is a different animal. Guys, on the NASDAQ, your large chart is a 34, not a 13. On the NASDAQ, your small chart, your entry chart, is either a 13 or a 10, depending on which way you went. I'm going to show you something about the NASDAQ. When the large chart rules are met, and guys, the large chart rules are met beautifully here. Beautifully here. If you're trading a 10-2 and you get divergence from a high or a low, so let me type this in because I'm going to send this over to Josh. He probably had to go to work. If you're trading a 10-2, divergence says wait for a reversal bar. Guys, this is the study that's been done, the hundreds of pictures. My brother and I spent a lot of time on the 10-2. If you get divergence off of the low, wait for a reversal bar. It's going to save your bacon more often than it doesn't. And then the second thing, and I'm going to do it right here at this entry, because if you're using a 13-2, if you're on a 13-2, if the small triggers are less than a full bar away, wait for a close on the correct side of them. They will act as support or resistance. So if you're one of my NASDAQ traders, did any of my other NASDAQ traders take this trade and wonder why they got run over? Maybe you did, maybe you didn't, I don't know. We'll see when we scroll through. Guys, this is the best look ever on the large chart. It really is. This is everything that I hope for. This is odds favorable. This is a clear path. This says go, go, go to me. But the NASDAQ is different, guys. And if you're trading with the 10-2, so Steve, Diego, Cindy, I don't know which size you're using. If divergence prints, wait for the reversal bar. Insist on confirmation. Your risk is established. Everything is good. And then the second thing is, guys, if these small triggers, remember when we just talked about a second ago, as long as you're left of these triggers, as long as you are left of these triggers, like if you just jumped in, it's going up, right? So if you were in a momentum trade, you'd never freaking exit with this look. Does that make sense, everybody? So why would you enter? So Steve Diego on a 13-2, when you get to these pink 1-to-1s and these small triggers are close, that's your cue to wait for a close on the correct side. It never happened. No reason to take a loss. Or Cindy, on the 10-2, Steve, same thing. Divergence prints, you need to wait for a reversal bar, not try to anticipate a reversal bar. See how those triggers behave to support, Cindy, Steve? That's why you wait for the actual bar. Don't try to. NASDAQ is different, guys. This is a very avoidable loss no matter which chart you're trading. And it happens fast. So I'm going to take that picture and I'll send it over to Josh. Guys, I blew out a lot of accounts learning to trade the NASDAQ. And those are some of the best lessons that I got in there. It does not trade like crude oil or the S&P. It's bigger, it's faster, it's scary. This is beautiful. Everything down, odds favorable. Pull back to resistance, money, and then you got stopped out on the second. Nice job, Andy. Great trade. Erla says, Mark, in case Jen hasn't tested your eyes today, let me go ahead and do that. Erla says, with odds favorable momentum and everything down, Gonna JTFI. Just jump in, right? And as long as price is on this side, Earl is getting paid. And when it gets to the wrong side, Erla's getting out. Erla, this is fan-freaking-tastic. This is embracing the momentum phase. And then when it pulls back up, man, let's look at your large chart real quick. You're looking for that clear path, right? It's starting to break through. The momentum isn't necessarily the best. So you let it pull back to a fib, and as it starts to head down, you're willing to take a shot. But that pivot stop out, weak triggers, you're like, yeah, that one's just not going to work. Let's go break even. Outstanding trading, Erla. But guys, this is how, one more time, this is how, if you're just going to jump into the market, as long as you're left to those small triggers, you have a fighting chance. Once you get to the other side, it's just wait for the next one. Morgan, I'm sorry, I missed this when you posted it. Do my small triggers look weird to you? Yes, Morgan, they look very weird to me. Did you reload your historical data and clean that up a little? Oh, right on. Yeah, this is where I right click and reload historical. And I hate to admit it, but when I saw you post that, I was mid-thought, but all I heard was, hey, Mark, did these pants make my butt look big? And I had a little chuckle under my breath. Sorry. I'm 12 on my sense of humor. But yeah, anytime you see this, right-click, reload historical data. Paul, it's a reference. It's an old joke in the room that when you have odds favorable and a clear path and you take these little jump-in trades and you execute them perfectly, it's the cult of Ron. John's little clean out works nice, doesn't it, Steve? Every day. I do it every day. I've done that too, Morgan. Man, look at the momentum. It is so far outside. And then you're like, wait a minute. That's kind of screwy. I've done it. I've done it. And that's where just familiarity with the charts goes a long way. Because you start going, man, that's not what it looks like. That's not how it's supposed to look. And then you refresh and you fix. And that just happens sometimes. So, all right, Kenan. Before I even read it, I'm going to say great annotation. Great job telling me what you're thinking here. So let's take a look. Strong top, weakening triggers, but. I love that word, but. Strong trend and clear path. Well, you don't have a strong trend yet. Not yet. Colombia's going to the final. What is that? Ping pong, Adriana? Tennis? Does Colombia have a basketball team? Oh, baseball. South Americans love baseball. I kid. The real football, not football Americano. Soccer. No, I was with you. I've got a good friend from Colombia, and he's going nuts. He's telling me about Colombia all the time, and I'm like, dude, I just don't watch soccer, but I'm happy for you. All right, so let's see where you got in. You jumped in 28 contracts on the wrong side of momentum, Kenan. 28 contracts on the wrong side of momentum. Without momentum on the large chart, without momentum on the small chart because the small triggers are there, divergence prints, and you hope to hell that it holds on. And it worked out. And you're rich. Kenan, can we agree that you got lucky? And guys, this goes back to... They do, Steve Diego. Oh, look at this. Suddenly Jen claims England when England's in the Euro finals. She was Australian last week. Well, then I'm going to claim England too because America used to belong to them. So look at us go. Kenan, did you catch the lesson earlier? If you just jump in on the wrong side of momentum, you've got to expect that pullback, right? And just for grins, you're in at 81.89, and you held that 89.99, 107. So, holy math, that's 18 ticks. One second. So Kenan, 18 ticks times $100 a tick. Nope, that's not right. Hold on. So it's $180 times 28 contracts. You are down over $9,000 in this trade without momentum. You are down over $9,000 in this trade without areas inside of favorable large triggers. Does that sound... What if with that weakness, it had gone up to the 1-to-1s? Would you have still been in? Oh no, wait a minute, you jumped in another. So Kenan, can I ask you why you're trading 56 contracts? And why you're willing to go $9,000 in the hole on a trade that doesn't even have rules? You don't have to answer. I'm not trying to put you on the spot or make you feel bad. But let me show you what you're doing. You're practicing the wrong trades. You're not trading a plan. You're not able to write rules on a chart. Does that make sense? You're hoping shit works out. No, that's full contract, Cindy. So what are you teaching yourself right now? And this is everybody. Guys, when you trade without rules, you're teaching yourself that it's okay to trade without rules, especially when you embrace some absolutely asinine management plan and it works out for you. This is how people blow out and never trade again. So how far were you willing to let this go up until you got stopped out? And then you have to ask yourself, is that a viable trading plan? You knew it wasn't good, so you added another 32 contracts. So, and Kenan, do whatever you want, man. And I can't stress that enough. I can't stress that enough, guys. Do whatever you want. It's totally up to you. If you had, just for grins, written on this chart, that I had all my triggers down, everything was below resistance, so I entered on a reversal bar from the area that was likely to hold so that my risk would be established, Kenan, you and I would be having a completely different conversation right now, especially with your exit at trouble. That makes sense. But to sit through $9,000 of drawdown, do you see the difference between the two? This one, all day long, virtual high fives, it makes sense, it's logical, this is a pattern that can be repeated. All day long, this is a great way to blow out accounts, right? Because wrong side of the small triggers, it went up, right? Wrong side of the small triggers, it went down. And you see that all day, every day. So all I'm trying to say is practice your rules. Practice like you want to play, because one day this shit's going to be real. And if you've convinced yourself that $10,000 worth of drawdown is acceptable, you've either got so much money you don't know what to do with yourself, or you're trading hope. So thank you for posting that picture. I love it, and there's good lessons. This one, all day long, I'll get on board with. That's a good one to avoid because it doesn't have any advantages present. Great stuff. And you are a freaking rock star for being willing to post in the room. Even when you knew it probably wasn't the right trade. So I love it. And man, we'll talk about it, and I'll never beat you up for it. Who was this? Was this Cindy? This was Cindy's. I love this. So here's a good example. If you, yeah, it comes from a place of love, I promise. I hope you feel that. If you take a momentum style trade, Cindy, you had the perfect entry at 46.50. The perfect entry at 46.50. 6 contracts. It only had to go to 51.50 to make $600, right? Cindy's been doing this a while. Cindy says, I know that momentum trades don't last forever. I know that when momentum trades die, they can turn into trend trades. So Cindy says, I'm cool with the drawdown. I'm cool with it coming against me. I'm okay with this because I understand this look. That I know that it's more often than not going to turn into a trend trade. And she's willing to hold, right? Everybody has different pain tolerances. Me, on these trades, I love to get paid. I'll take 5 off at $100, and then if it turns into a trend trade, I'll add those 5 back on, and I'll double dip. And that's just me. Everybody's got a different plan. Cindy's plan is, you know what? I have done so much study. I have so much faith. I understand the ideas of momentum trades. Where is that? Did I put it in there? Shoot, I took a picture today. It might have even been of the one that you took. Similar. When the momentum trade fails, where'd it go? Well, heck, I lost it. Nope, there it is. When the momentum trade fails, if the large chart is still 100% in agreement, it typically turns into a trend trade, right? So you have to understand, Cindy's already in right here. She's only at break even if it turns into a trend trade, right? Not a lot of risk. Guys, if you jump in on the reversal bar, you set up for the pullback, and that's kind of what we just saw. So, Cindy, very nicely done. I would have put another 6 on right there. That's a great look. But does that make sense on the whole? And you don't have to incorporate this, but for you guys that aren't comfortable with drawdowns, for you guys that are like me, I hate drawdowns. I hate watching myself give it back. I'm in at 46.50. I'm out at 52, whatever. I'm making $100, $110 a contract. And then I'm leaving 1 on in case it doesn't come back. And I've got this willingness to drop it back on, to put those 5 back on. I love it. You're killing it. You're killing it, Cindy. All right, let's see who's next. Andy said this one met his goals. There it is. Everything says up. It's outside, right? It's outside of the correction point. So you take a chance. Wrong side of the favorable large triggers. We watched this one fail 4 or 5 times yesterday. But this is using the idea that if all of my triggers are up above support, support's likely to hold, right? You took a chance. Nicely done. I love it, Andy. That's having your flow with the market. And then Adriana, she's on her phone. So I hope you hear this, because Adriana says, momentum, clear path, perfect entry, easy money. Takes a lot of them off at trouble, lets the last one run a little bit. And then Adriana, you and Morgan have the same wonky small triggers. I would refresh data. But do you see how price, well, it got all over the wrong side because your triggers are wrong. You're out at the second trouble. Beautiful trade. I hope you hear that. Beautiful trade. Steve Diego. I can't say one without the other. It just feels weird. Steve hoping that the fib holds. Clear path, strong triggers, but getting inside of the large with a strong top, odds favorable. You're comfortable with it. Pulls back to resistance. Initial stop is where other side of the 1-to-1s. Outside of the correction point. Should have waited for the reversal bar. I do agree with that, Steve Diego. First contract money. Second contract trouble. Beautiful. Absolutely beautiful. And I like this because what you said is, oh man, I'm going to get in at areas, but they're outside of the correction point. Maybe the reversal bar makes more sense. And it's almost the exact same entry. Great trade, Steve Diego. And then this one, that second contract, this is where, as long as you're left to those small triggers, enjoy the ride. Until you get to 70, right? 70 is the trouble spot. Beautiful trade, Steve Diego. Beautiful, beautiful, beautiful. Oh, Adriana, you are here. All right, Paul. Termination, full reversal. Let me make this bigger. Oh, you won't trade into the open? Right on. Man, that didn't do anything to... All right. 50-50. Odds favorable. No divergence. Perfect entry. Quick profits. Divergence prints. Get out, break even. Nicely done, Paul. Nicely done. A little tight on the 50-50, but beautiful. You knew exactly what you were getting into. Because you knew what you were getting into, you weren't willing to sit and hope. You take quick profits at trouble, and the second it starts to go south, you're out. And that's a beauty right there. Divergence from the fib says no more long trades, right? So you didn't try to get back in. Really well done, Paul. Got that flow. Working those rules. Knowing what kind of trade you're in. Taking quick profits when it's not perfect. Is this 50% Ron worthy? Whoops, what did I do? Odds favorable. You jump in, you jump out. Not quite Ron's rules, Morgan, but odds favorable, odds favorable. If you're just going to jump the hell in, get paid. Nice. So one thing, and this is how I ended up blowing out a lot, trying to do what Ron did. Morgan, are you with me on this one? I'm going to give you his secret because Ron's a generous dude and he doesn't mind sharing. Ron's plan says that the back of the bar has to clear trouble. That the back of the bar has to clear trouble. And for him, that's the warm fuzzy to take that jump in and go. So you may not have had room on this one per his plan. Down here, there was definitely a possibility. You were actually a bit early because here was directly into it. His rules don't really fit here, but I like that you're like, man, this isn't a home run. His rules say the back of the bar has to clear, which means you're already at trouble. No, it's a large chart thing. Go up and look at the one that he posted earlier today and you'll see it. And man, Morgan, I'm telling you, I tried to do what he did, and I kept losing, and I couldn't figure out why. And then he let me lose just enough, and then he shared that one with me where he says, yeah, the back of the bar, that's my rule. And I was like, oh, son of a gun. That makes sense. Nicely done, though. Way to get in and get out, make those profits. Because you know it's not a home run, right? That's a base hit scenario. Andrew Z. Odds favorable. Clear path. Perfect entry. Money, money. So Andrew, your annotation says both targets hit, but you think that the second target should probably have been put 1 to 2 ticks above the divergence low. So let's talk about the management side of this. First of all, dude, beautiful. Beautiful trade. Perfect trade. 100%. I couldn't find a fault with this. When I've got a clear path, Andrew, couldn't care less about this line. This line, to be honest with you, is where this contract comes off. If I've got this look on the large chart. Does that make sense? When the large chart is perfect, guys, I get the KISS plan, but man, my first contract doesn't come off until this, because look what happens. I mean, at the time of your entry, everything's amazing. And then between that line and your first exit, it just kept getting better. So I would probably go one off here, and then either second contract at the fib, second contract at the 1-to-1, and tighten up or something. But when it's perfect here, I'm not worried about this line so much. If anything, that's where my first contract comes off. Beautiful trade, man. Beautiful trade. You know what? Hold on. Let me go back. I think the world should study this one. So I'm going to put you into my spreadsheet, Andrew Z. There we go. And now people can study exactly what you did so that they can do it too. Nicely done. One for Barbie. That's code for sim. All right, so Andy, pardon the French, but you've developed a bit of a hard-on for the strong trending market. So forgive me for saying that if that's offensive to anybody. So when it's a strong trending market, guys, this is your look right there. That's your look. Dash line, riding the piggyback. That's your look in a strong trending market. Andy, you've just got weak triggers, brother. That's it. You've just got weak triggers right at a potential termination condition. You don't even have a clear path yet. You've got weak triggers here. You've got divergence, right? You're using the area, which creates an awesome advantage. And it is an area inside of favorable large triggers. But do you see how, well, you know what? You have a 50-50 with weak triggers and divergence and weak triggers. And you're really just kind of banking on this fib holding, right? Yeah. It's not even a momentum trade because there's no momentum. Does that make sense? And man, there's nothing worse than taking a winner and then I come in and I bust it up a little bit. So if you're going to take a momentum trade, there's got to be momentum on both charts, right? So we know it's not a momentum trade and it's not the strong trending market because we don't have that strong trending market look. It's literally just weak triggers at a potential termination. And then you took advantage of where price should correct and something to bounce off of and where stop should go. I don't disagree with the trade, but this isn't a strong trending market trade. This is just, let's hope the fib holds because it's buried in triggers. Let me have tight little risk. And if it continues up, then awesome. And if it doesn't, I lose virtually nothing. It's almost a trend trade. Well, it's not a high probability trend trade. It is a trend trade. You're with the trend. You're with the direction. You're from an area inside of favorable large triggers. It's just not high probability, but it's still a great look. Those are the ones that you grow into, Andy, and your ability to recognize things in the moment are great. Rob, this is what we call the reversal bar marker. So this line right here, and let me show you, I'll go to the glossary of common terms too. You're going to have it on your large chart and your small chart. But if I go to the glossary of common terms, The reversal bar marker, all it is, it's exactly what it sounds like. It is the price where this bar is going to become a reversal bar. That's the significance. That's all it is it's the price where you get a reversal bar, whether it's the large chart or small chart. So we use it on the large chart, Rob, for the gap theory. On the large chart, let me pull up my spreadsheet real quick and I'll go to a gap theory picture. Dun, 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 dun. So this reversal bar marker is going to let me know if the mid-band is a termination condition. And it does it if price accelerates away from triggers and hits an area, whether it's fibs, mid-bands, whatever. Suspenseful music. I do that, Christine. Hayden does it too, sound effects. Novak men speak with sound effects. If price comes down and reaches an area, Rob, whether it's a mid-band, fibs, 1-to-1s, and these large triggers are above the reversal bar marker, that's that gap theory. That's that thing that's saying, hey, no more short trades because price is likely to close the gap to the large triggers. Does that make sense, everybody? So if this blue line were a mid-band, then the gap theory would say, hey, Mark, hey, Rob, that mid-band is behaving as a termination condition. That mid-band is an absolutely no trades into it because the large triggers are a full bar away. The reversal bar lets me know that they're a full bar away. Does that make sense, Rob? No? Gap theory. So Cheetah, what chart are termination conditions found on? So let's start there. No, you shouldn't say yes if it's a no. Large chart, right? So which chart is the gap theory? Large chart. Amen, brother. You got it. That's it. It's a large chart. So Rob, here's a picture of it right now. And I'm going to show you how this works. So the market's going down, right? And boom, boom, boom. It takes a turn. And it's going up. And you see where the large triggers are when I get to this mid-band? They're way far away. And it goes up. And Rob, your reversal bar marker at the time, let me find a little arrow here, is probably somewhere right around here. You're going to see that orange bar. So I'm up around the mid-band, and I'm looking, and man, these darn large triggers are below that reversal bar. So what that says to me is the gap theory is in play, and I'm not going to try to find a long trade. I'm not going to look for a momentum trade. I'm not going to look for a trend trade. Oh, I almost called it perfect. There's my first reversal bar. Do you see how it didn't hit the large triggers? It actually took 2 bars before we got to those large triggers. So that distance right there lets me know don't go long into this mid-band. This is when the mid-band behaves as a termination condition, is when those large triggers, let me go back to it. When the large triggers are a full bar away. So Rob, we're using that reversal bar marker to determine that the large triggers are a full bar away. And you'll see it all day long. So let's go back and see if we can find another time where it was true. Price pulls all the way back to the mid-band area. The large triggers don't follow, and it closes the gap. The reversal bar marker lets me know where this bar will become a reversal bar. That's okay. So Rob, do this. I'm going to click on some gap theories, okay? And And these are all in the spreadsheet that you have. And I appreciate that you would say you don't understand yet. Mid-band hit. Triggers are a full bar away below the reversal bar marker. No longs. So what it's doing is it's creating the language. And this is one of the reasons why chart annotation is so important, guys. So here's another one that says gap theory. The area's hit. Do you see how far away the large triggers are? And it sucks right back to those large triggers. One more. Gap theory reaches the areas, large bar away, no short trades into the area. So all we're doing, Rob, the only thing that we're doing with that reversal bar marker right now, it's who cares? Because we didn't reach an area, right? But when we hit an area, we'll make sure that the large triggers aren't a full bar away. I don't have the ES up. Do you want to show me a picture, Ron? That would be awesome. And Rob, it's initially going to be used to tell you that the mid band is a termination condition. So if you want to keep it simple at first, it's just going to tell you when this mid band is a no more long trade scenario, if those large triggers are a full bar away. Absolutely not, Kenan. Unless you have rules for it. But when I hit the mid band, my small triggers are up, my large triggers are down, my trend is up. And look at this. The mid band was at 37, it went all the way to 48. How are you going to pinpoint? It's just a moving average. Just because your rules aren't met doesn't mean go the other direction. There we go. So this is happening in the S&P right now, guys. Mid-band is hit. Those large triggers are all the way down here by that reversal bar marker. It's probably going to close that gap. The same way it did right here, guys. There's one that happened there. Price hit the mid-band and resistance, and there was room for a full bar to come back to those large triggers. If you tried the long, you got run over. Does that make sense? Does that help a little bit visually? There's actually one in the process and one after the fact right there. And it'll take a little study. And Kenan, I used to do that every time. I would try to go short at the mid-band every time, and I would get run over all the time, because by the time it gets there, you're fighting it. You're fighting odds favorable momentum. You're fighting direction. You're fighting all the things that create successful trades. Does that make sense? And then sure enough, there's the after fact. That's pretty kick-ass. I don't have NASDAQ open. Feel free to drop a picture, Steve Diego. But there it is again. There's the pattern twice. So Rob, what happened? You did that twice where you tried the long trade and it just ran you over? I had to take about 100 of those before I finally started believing it and actually looking for it. And I'm not going to lie to you guys, when the NASDAQ is moving so fast, there's times where I do it and go, oh crap, gap theory, and get out of my trade before it pummels over me. But there's a good example. If you thought you were going to go long at support, it just runs you right over. You're coming off a termination. Thank you for those pictures, Ron. So gap theory, we can study it. Let's see what's going on in the market right now. Invoices sent. I like it. Not odds favorable. Total clear path. If you felt like trying the fib and waited for the reversal bar, guys, that was pretty easy money. Do you see how a little confirmation when it's not perfect can go a long way for you? Because there's a lot of you that love to get in at areas on the wrong side of the correction point. There's a lot of you that love to get in at the areas on the wrong side of the trigger lines, guys. If this is actually going to hold, you're going to get a reversal bar. If it has any chance in the world of holding, you're going to get a reversal bar. If you never get that reversal bar, guys, then you're no longer saying, I hope it holds. Now you're saying, it's held. My risk is in place. Does that make sense, everybody? I hope so. And now we're just kind of in a holding pattern. That's all the pictures. Ooh, hold on. Nope, I wanted the after picture. Hold on one second. Dun, dun, dun. I can't put Ron's pictures in the spreadsheet under trades because it scares children, but I will definitely put this one in there. There we go. And guys, have you noticed that when you post a trade that doesn't fit rules, I don't tell you that you're a bad person for it. The only thing I do is I say, hey, let's look at advantages and disadvantages and make a decision. Steve Diego, where did you see gap theory on here? Oh, were they they were a full bar away when it hit this mid band? And it didn't come true here, right? It's hard to tell after the fact. But absolutely, this was Steve Diego saying, hey, this is the gap theory. I'm not going to take that short. I'll let it come down a little bit. Awesome. These are easier to see in the moment when they don't actually fill the gap. Jeffrey Dean, I'll go find yours. Did you post? Did I miss one? Andy Man, odds favorable, clear path, perfect entry, and they got you. That's it. That's everything. Could I convince you to repost it, Jeffrey, instead of me chasing it to the top? It'll probably be quicker that way since you have it right there in front of you. Guys, anything that wins 70% of the time is obligated to lose 20 to 30% of the time. Andy took this perfect. Odds favorable, clear path, perfect entry. And a stop was appropriate. And man, this is a cost of doing business, guys. Andy, were you sad when it lost? Right on, Gary. These are the ones that once you trust your plan, they don't faze you. You're just like, hey, that was everything. This is why I don't trade gold, though. I'll trade the NASDAQ. I won't trade gold. I don't have a plan for gold and all of its overrunning. And gold is very temperamental. That's the Russell? Oh, it is the Russell. Yeah, I don't have any plans for the Russell. I don't know anything about it. Never traded it. I do know that's a smaller loss, though, because it's like half the denomination. What chart is this? 3 divergences? Oh, this is your small chart. Absolutely. 1 divergence and it bounces. 2 divergences, it pushes a little lower. 3rd divergence, down it goes, nothing matches. No trade here, right, Jeffrey Dean? But I'm just curious, what was your large chart? Why wasn't there a trade here? Oh, this was the 50-50. I remember this trade. I took this trade. I know exactly what this trade looked like. So check this out. Jeffrey, you're going to like this. I did this for you. Here's the beginning of it. Had odds favorable momentum. I was coming from a strong bottom. The first one had no divergence. If you missed the first one, that's okay. I missed it too. I was doing something. Divergence was my red flag, guys. And for me, 1 divergence on a 50-50 from a strong bottom, I'm cool with that. Doesn't faze me. For the brand new user, you're not going to think through your rules fast enough to decide whether it's okay or not, so it says don't take it in the KISS plan. I'm in at the top of the window, and my stop is where the market shouldn't be. Does that make sense, everybody? This is a 50-50 trade. I'm in at the area inside of the triggers. My stop is where the market shouldn't be. And sure enough, it went right to the bottom of the window, guys. And at this point, I was down like 140, 150 bucks. But my plan says my stop goes where the market shouldn't. So I'm good. It kept me safe. My targets were at 100 and 200 here. Second divergence is an exit condition for a 50-50. So Jeffrey Dean, where you had that second divergence, I was already in. I was about to get paid. And sure enough, I did. And because that second divergence is an entry condition for me, I actually reduced my risk. And at this point, I've got like 4 ticks of risk because I'll know that divergence is true by 2 ticks past the reversal bar marker. That's the second way I use the reversal bar marker. I know that it takes 3 bars for divergence to be true, so I put a stop where the third bar is. And it hits my first target, and I go break even, and it takes me out break even before the divergence ever prints. And I make $100 on a medium probability trade. And then that second divergence, Jeffrey, because it's a 50-50, my plan says absolutely no more trades. So with a 50-50, let's go back to Jeffrey's picture, 2 divergences says don't do it. If this were a high probability trend trade, if it was a clear path, there still may have been a shot with 2 divergences, and then the third kills it. Great job, Jeffrey. Great read, man. And I'm glad that I had a couple pictures to line up with that one too. So, and I took these pictures and I went through, oh, you will. I'm not going to let you not get better at it. I'm stubborn as hell. But guys, I took these pictures because everything is about rules. And it was funny because I took the entry and my stop was based on rules, not emotion. And my first target is based on rules, not emotion. Right? Everything says down here, and I'm still hoping the market goes up because of this look. And then I take my first profits, and I'm break even, and this is where Ron goes, hey Mark, I have a fib at 54. And I lovingly replied, Ron, hell, I don't care, I don't. I've got a 50-50. And my rules say, go break even and wait. And I've already been paid, and I've got absolutely nothing to lose, and I couldn't care less what happens next, right? And we had a good chuckle. And what happened next was that they stopped me out break even. And then the market kept going down. So even on the trades that don't win, even on the trades that don't have the advantages, guys, you can still make money. So how do we feel about weak triggers and no areas inside of favorable large triggers? 2 out of 3 gone. 2 out of 3 advantages missing. Adherence to rules. I can't stress it enough. Adherence to rules. And if you don't know your rules, you've got to write them down 100 times. You guys remember Bart Simpson writing on the blackboard over and over? I will not do this. I will do this. Guys, I'm telling you, repetition is the key to recognition. Don't put the pressure on yourself to be this outstanding trader in your first week, in your first month, hell, sometimes even in your first year, depending on who you are and how you learn. Everybody learns differently. But if you keep it simple, right? Here we go, the education path. If you keep it simple, if you keep it focused, if you are dedicated to rules, guys, you can minimize your curve by posting in the room. And this is such a huge thing. Every trade, win, lose, or draw. Show me what you're doing. I don't care if you're doing it right. It doesn't matter. I don't expect you to do it right. But I want to see what you're doing. Christine, have you fired up that simulator yet? Show me what you're doing. Show me a picture, right? Parker, I see you back in here. Let me know what I can help you with. Josh, I think you jumped out when we reviewed your trade. Let me know if you want me to go over it again. But guys, following the rules, right? Not ready to post yet. All right, I'm going to call you and tell you what I think about that. Or shit, I get to tell you tomorrow. Do I trade jump the fudge in momentum trades? No, not really, Steve. Not with live money, I don't. Not on the NASDAQ, I don't. Not on the NASDAQ, I don't, Steve. Almost got me. There's too many fluctuations and too many fights and too much indecision. I don't care for them. I follow a rules-based trade when I take momentum trades, Steve. I take that strong bottom, smalls break the area, snap back to the area. That's my trade. I'm not a jump-in guy. I don't believe in it the way Ron does. I can do it. And on something like crude oil, I don't mind it so much. I like it. But I won't do it on the NASDAQ. There's too much volatility in the NASDAQ for me to feel like I can be consistent with it. And my simulated results say it's hard to be consistent with it. Guys, you got to know the difference between what you're doing right and what you're doing wrong. And that's what I do every day. That's all we talk about. I try not to body shame you or anything. We talk about advantages. We talk about whether or not there's momentum. We talk about whether or not you had a clear path. We talk about whether or not the area was there. We do it every day. Every day. Because repetition is awesome, right? Repetition gets you in there. JTFI is a part of your plan, but not on the NASDAQ. That thing's haunted. The NASDAQ has crazy volatility, guys. The people that trade the NASDAQ, we're the same people that jump out of perfectly good airplanes or swim with sharks. But once you're good at it, Cindy, it doesn't move that fast, does it? I made this one day. It was half a joke and half not. And I called this one the Chili Dog. That's the name. This was me creating a plan. Back of the price bar clears areas on the 13.2. Odds favorable momentum on both charts. Minimum 110 profit before small chart problems. Room to the target. Enter with price left of the small triggers. Any close on the wrong side of the triggers is an exit. How's that for a plan? I could replace Chili Dog with JTFI. But guys, when I was trying to figure out what the hell Ron's doing, I didn't just keep losing trades. Well, I did. I lost a lot of trades to do it on Simulator. But what I did is I studied what he did, and I learned how he did it, right? When the back of the bar clears trouble and price is to the left and I've got room to make $110, maybe I make it. So you're going to grow. Your plan's going to grow. Your vision's going to grow. The patterns you recognize are going to grow. Every day you're going to get a little bit better. Things are going to become a little bit more clear. Josh, are you in here? I see you that you popped in. You gave us an awesome picture to talk about NASDAQ entries. Let me put this in here for your NASDAQ entries, guys. If you're a NASDAQ trend trader, this is your entry Bible to avoid losses. All right, guys, we have time. What do you want to talk about? Isn't it crazy how weak triggers? Hey, Rob. Price reached an area. Large triggers are above the reversal bar marker. That's the gap theory. Like a 2-year-old. Sorry. I got so excited. There it is live right in front of you. There's a gap theory. Let's see if it closes the gap. Wouldn't that be awesome? Does everybody see it? Christine, do you see it? Kenan, I'm not arbitrarily going long, right? Because, odds favorable momentum. But, price hit an area, large triggers are a full bar away. Large chart says down, large chart says momentum, small chart says down. Hell, everything says down. Except that big ugly termination condition. Ron got in at 52. He expects it to go to 66. Isn't it fun when you're typing it, Ron, and I'm saying it out loud to the room? Guys, if you don't think I'm going to learn your patterns, you're mistaken. I will learn every pattern that you have in you. I will recognize every habit that you've created, and I'll work with you daily to eliminate the bad habits and embrace the good habits. And I will know every thought in your head, and it's almost spooky. But this is how we get to where we want to be, right? Man, you got to make mistakes. You've got to make mistakes to get better at this. And you just got to present those mistakes. The only pressure you're ever going to feel in this room is self-imposed. I promise you that. I had my best friend's little brother call me yesterday. And he goes, "So how long will it take me to make money?" And I told him, I said, "You're a jackass narcissist. It'll probably take you forever because you're always going to think you're smarter than the market." He didn't like my answer. Submit to the fact that you're not in control. Sometimes, Morgan, I will. Sometimes I will. If the rules are met, but Morgan, so HVA trades for me. Let me see if I can pull this over. So for me, HVA trades line up with a look. This white bar creates the HVA line. This white bar creates the HVA line. This white bar creates the HVA line. So I actually take a trade, Morgan, that John Novak taught me. When I have a termination condition, when I get a white bar off of it, small triggers have to roll on my range chart. I'm freaking gone. I'm already long. Before the HVA bar ever forms, I'm already long. Or I'm already short if my rules are met. So for me here, my entry was right around 53-ish. And it's just using it because if you go through the whole chart read, termination condition is awesome, right? Gap theory suggests that it may go up. Divergence from a fib says don't you dare go short. And then when I throw in an extra chart over here, here's your HVA, Morgan. That green line right at the triggers after a termination. And then my stop initially is right there because if it plows through, I don't want it. Ron's already in. But this HVA line is also the point where a second higher divergence is pretty likely. I'll take one off at trouble. And then if it's going to run, hell, it may go to 86. So Morgan, that is the perfect HVA trade right there. But this kind of sets me up for it. And then I'm watching, my plan says get paid at an HVA line against it. But look how low my risk is. Once I get a reversal bar, I've got virtually nothing on this trade. I'm right behind this bar. Does that make sense? That's an HVA trade, guys. But it's an accumulation. First I have a termination condition that no triggers go through. Then I let my fast triggers roll. And I look for an entry right at that green line. And my stop is right below where my range chart gives me. And guys, it's a pretty easy way to make a little cash. I love the HVA trade. Nexgen's been teaching it forever. So Kenan, when you asked, do I just go long at the mid band? Hell no. Have a set of rules, right? Have a set of rules to go long at that mid-band. And this fits almost the momentum trade rule as well, off of a good bottom. Small triggers right at the mid-band. Price pulls back to the mid-band. That little snapback right there fits the rules. Kind of cool, right? And guys, this gets into so many different things. That's a bad top. What's a bad top mean? It means that the buyers may try to get to that fib. Gap theory says that it may close the gap. Yeah, but it didn't work out, did it? Actually, it pulled right back to the HVA line again. So HVA to 5-1 mid-band and long in ES earlier, Dave. I like that you're eavesdropping and you jump in on this one. So termination, HVA trade, out of trouble. So Dave's HVA line at the small triggers lined up right here on a momentum style trade. Best trades are 13-2, 8 range small triggers in trade direction. Amen. So Dave, did you know that this is the same trade that Nexgen started teaching in 2004? When a fib holds and the small triggers roll, buy the pullback. We've just been able to refine it visually with an HVA line, pulling back to the large triggers. 2004. I know you know that, but guys, nothing that I teach is brand new. There it is. Here's Dave's trade. Let's see if that opens up. Here's Dave's trade on what Nexgen looked like in 2004, guys. Key Fibonacci resistance holds. Small triggers roll. Sell a pullback. Key Fibonacci support holds. Small triggers roll. Sell a pullback. The pullback here looks exactly like that snapback to the large trigger here. And it just so happens that it fits with an HVA line right here. Pretty cool, right? So yeah, Morgan, if the rules are met, I will take an HVA trade, but it tends to look more like that white bar trade. Good stuff, ladies and gentlemen. But it's counter trend. And Morgan, the key to these HVA trades is you have to have room to your target. It's in the rules, but you have to have room to get up to trouble. Just because you have an HVA, you can't trade into Fibonacci resistance or support. Just because you have an HVA, you can't just assume that the world is going to step aside and let your trade work. So you've got to watch out for that. And you will very much. And the real rules for an HVA, Morgan, say that these triggers roll too. And they never did. Which is why that white bar trade that I take is a little outside of the rules. It anticipates the HVA trade. But until these triggers roll, there's not a lot of reason to believe the market's going up yet. This is where you start getting those retests and those fluctuations. But once the large roll, the way we saw it in Dave's, once the large roll, that kind of confirms the bottom and makes it easy. Steve, it's 4 years of the same thing, man. I'd love to say that I'm gifted, but I'm not. I don't understand math to save my life. And all of these are just mathematical things. But patterns I get, because patterns for me go back to art and everything. So when I learned how to tattoo, I did most of my learning on my own thighs, which meant that I had to do it upside down, which meant that I had to recognize shapes and shades rather than the overall picture. I had to be able to look at something and break it into the pieces instead of the whole. And that's kind of what trading is, guys, is you're breaking one trade into 3 different pieces, right? You're breaking one trade into strong triggers. And once you have strong triggers, let's see if we can find a way to make this look right. Once you can identify strong triggers and you're comfortable with it, well, then you have to be able to understand the clear path, right? And the path is only clear when one thing happens. So you commit to the clear path, and then once you have the clear path and those strong triggers, well, then all you have to do is practice this pattern, right? This 1980 Pac-Man Atari 2600. This is the pattern that lets me play all day. This is the pattern that wins more than it loses. This is the pattern that has statistical advantages. And you guys that are my age, give or take, remember video games, right? Does everybody remember when Pac-Man came out on Atari 2600? And there was a pattern that if you just followed the pattern, you could play forever and never give your big brother a turn, ever, until he punched you in the side of the head and took your controller. And guys, there was one on Galaga that if you followed that pattern, they stopped shooting at you. And there was one on virtually every video game, because back then in the 80s, the thing is always put that one cheat into the game. Contra on Nintendo, the up, up, down, down, left, right, left, right. That was the pattern that gave you unlimited lives. And if you learned the pattern, you had unlimited lives. And if you didn't know the pattern, you died. So it's Rubik's Cube, right, Christine? But there was a pattern to beat Rubik's Cube. There's patterns for everything. And that's all this is trading patterns. Morgan, do you see how it's pushing down with those large triggers still down? You had one shot at the long if you were using the white bar, but the fact that those large triggers never rolled, you got to break even early, right? You took quick profits. It's not a home run. It's anticipating a breakout, but it wasn't there yet. So it's fun when I talk to people that are my age, and they're like, well, how do you do what you do, right? It's just patterns. Pick of the 21-3 chart where you took the 5-1 mid-band trend trade, says be careful. So Dave, you're using a 21-3 as well, right? Dave's so comfortable with his rules that he could add something in there. So the 21-3, let me see, where did you go long? So you went long here, right up in, right? And then the gap theory. Oh, this is it. It never blinked, did it? Resistance likely to hold. What a great place to take profits. And then Pete in here loves that 21 fat fib. He'll trade that thing all day long. What a great way to incorporate another chart to help you make good decisions about taking exits. And guys, when you grow with the software, when 2 charts is easy, there's more charts, there's more information. But if you don't have it in you to do it with just 2, be careful. It's a lot of minds, a lot of minds. What a great class. You guys are amazing. Great questions, great pictures, great lessons. Hopefully you're feeling a little bit smarter today. Guys, there's one thing that I'm sure of, and I'm not sure of a lot in this crazy world. I am sure that the pattern works. There's no doubt in my mind that strong triggers, clear path, area inside of favorable large triggers works. There's no doubt in my mind that it does. I want there to be doubt in your mind. I want you, and I know this sounds weird, I want you sitting in your chair right now, if you're not consistent, and I want you saying something like, you know what, Novak's full of shit. There's no way this works. He talks about it, but he goes back and he handpicks things, or he goes back and he makes stuff up, and those pictures are doctored. And I've had people do this, guys, and it doesn't faze me. It doesn't bother me because I've done the study. But if you're doubtful, or if you're not consistent every day, if you're one of my people that are still struggling to find that consistency, that can't seem to win more than they lose, take a step back to simplicity, take a step back to the KISS plans, and learn how to follow this to the letter. And tell me where you're at in 5 days. Just take 5 days on simulator. Don't worry about your prop firms. Don't worry about anything cheap fake. Isn't that silly? Guys, don't worry about anything other than your rules met for 5 days. Follow the KISS plan for 5 days and tell me where you're at. Most people find themselves between 80 and 90% winners with this. This is the one that I've had people come in and say, hey, you know what? I'm going to try Nexgen. And they do their demo for 7 days, and they do the study, and they ask the questions, and they focus. And this is all they look for. And they're making money day in and day out. Guys, trading isn't about finding the most trades. Trading isn't being first in. Trading isn't being last out. Trading is a business. Trading is a business where your goal is to profit every day. And the easiest way to do that is to learn to be patient. So you'll start to recognize patterns, Morgan. When the large triggers don't roll, it may retest, and it did. And now there's that second higher divergence, which is pretty cool. And there's smalls on the correct side of the large triggers, and there's the large triggers rolling. And Morgan, now the HVA rules say that I put a buy limit order right here above that HVA line, and now the rules are met for a high volume area trade. Does that make sense? The first one is anticipating the breakout using a white bar. This one is 100% rules met. It's a large chart termination that no triggers break through. It's the large triggers rolling, and it's that HVA line. And that's the difference. This is a little more advanced. This is quick profits, anticipating the breakout using a pattern. This is the one where you'll find the rules right inside of the trading manual. I love the HVA trade. Sometimes it doesn't come back, which is kind of a bummer. Possibly. It is. But momentum trade rules aren't met. That would be a momentum trade if the small triggers were rolled and up here. It's not a coincidence that the smalls are above the large, that the large have rolled. It's not a coincidence that the trend is now up. There's things that you can control and there's things that you can't control. And the only thing that you'll ever control is whether or not your rules are met. And that's kind of a bummer. We all think that we know what's going to happen. Oh, man. Congratulations, Pete. I go in next Monday to have a basil pulled off the top of my head. That's awesome. Mine isn't nearly as serious as yours, dude. Oh, that's... shit. I don't care what I talked about today. That's the good news today. That's awesome. Congratulations. Cancer-free. What a great phrase. What a great phrase. I love this community. I love this community here. You know what? I hope so. I learn from you all the time. I learn from all you guys all the time. Guys, I've got a minute or two. Is there anything that you guys want to talk about before we